Carnage and mayhem, what's next? What's up, everybody? Welcome aboard. It's Bubba's Bottom Line, and great to be back after a week at sea. And of course, while I was gone, there was a lot of carnage and a lot of mayhem happening in the markets. And after opening on their highs last Monday, they basically had a key reversal, a weekly key reversal, and basically closed almost on their lows. Friday did end up a little bit kind of mixed markets. S&P and Dow split. But overall, it was a pretty ugly week. And of course, as we've been continuing to comment on each and every week, the key here is going to be the dollar and the VIX. The dollar is the one asset class that the Fed is still trying to control, to keep suppressed, to keep the imaginary interest rates lower, although they're trying to rise, as we see. Although the 10-year came off a little bit, is 10-year is trading at about 288, and the 30 is trading at about 315. But again, they're not going to be able to stop the rising rates. They're not going to be able to keep their foot on the dollar. This is an attempt by the Fed and the central banks around the world to keep a lot of pressure on the U.S. dollar, and it's not going to work. It never has worked. The Fed has never worked. The Fed is an organization that is purely there for the wealthy, that does not really help the overall system. If they were doing just their job, we might have a shot, but of course, they're doing more than just their job. They're printing a lot of money that is a waste of time and a waste of money. It's really phenomenal that we can continue to be trapped and consumed by the Federal Reserve, and why they're even a part of this is ridiculous. Why they have not ever been audited, why they are still even in operation as a private corporation that really does not benefit anybody. I think that this is a system that is broken down. And this is a system that will not ever go away. We see consistently that they make the wrong decision always at the wrong time. The whole policies are ridiculous, clueless, and really should not be a part. And again, if we could have an audit of the Fed, if we could have a look into them and see what they're exactly doing, and separate them from the government, because even though they are a private corporation, they are really almost the fourth branch of the government. It's not a good system. It's not a good situation. And it does not clean up the mess that is being made within this economy. You cannot continue to create debt and figure that we're going to get through all of this if you allow the debt structure to be what it is. Because again, it's only going to create a massive failure, which is, I think, what we're in the start of right now. Now, again, just to be clear, we are not predicting the end of the world. We are not predicting that markets are going to go down forever, but we are looking for a pretty stiff, healthy correction, which we do believe is underway. The market action last week proved and did exactly what we thought it should do, which was rally back up into a resistance level, which it did, and then it fell down and fell apart. So each day last week, we made a lower high and a lower low, bringing the markets lower. Now again, would there be a bounce possibly this week? Sure, there's going to be rallies. All right, one thing, let's be clear about the markets. They're going to go up, they're going to go down, but what you're looking for is the general trend and the speed at which we're going to move. And when we get a little higher speed, that usually indicates that the markets are going to head lower. So we're going to see, I think, more movement to the downside. Now, you've had a lot of information out there, a lot of news out there. But really, what does the news mean? It really means nothing, because the news usually is already priced in to the markets. So as I like to say, is forget about the news, you follow the money. The money will tell you what the news is going to be overall. This is not something that is new. This is not something that just started today. This has been in the history of free markets, even though our markets aren't so free anymore. But in the history of markets, the history of exchanges, is the free markets decide and value and put what the correct price of asset classes should be. So we're not going to see a disaster. We're going to see what many will consider to be a disaster because they are not going to be prepared for it. They are not going to put themselves into the right position for it. But overall, everything that's going to happen in the next 6 months to a year can be set up for and can be prepped for if you're willing to take care of the preparation. And one of the mainstays for everybody you should be able to hedge your portfolio, not try to guess out which way we're going to go or when to move assets, but why not be able to be in a position that just has solid asset classes that you like, that you want to own, that you can hedge and protect. It makes no sense to try to roll and try to guess, well, we're going to move out of these higher risk asset classes and we're going to move into lower risk asset classes. If you knew how to do that, you wouldn't have to worry about business at all. And again, that's really the bigger problem. Instead of being hedged, and then you don't have to ever leave an asset class. That, I think, is the bigger problem that we need to see. But so if we go back to look at last week, we've got consumer confidence. All right, consumer confidence once again spiking to new highs. I warn you, okay, about these numbers. First of all, by the time you and me see these numbers, we're about the 1 or 2 millionth person in line that's actually seen them. But if you go back and just take a look at the highs of consumer confidence, look at where they came in. They came in 1987. Oh, let's see, we had the collapse. They came in the 90s. Oh, we had the collapse. They came in 2008. Oh, we had the collapse. And of course now. So consumer confidence, as much as the pundits would like to banter about how good they are and what those numbers actually mean, what they're telling you is that really they're not confidence numbers, they're overconfidence numbers. And you're seeing that play out on a daily basis because you've got record amounts of margin debt still being priced in. All right, we are in that cycle where we just made a lower high offer of a major move, which indicates that the market's at the top is in and the market's going lower. You can look at it any way you want. All right, and again, I'm not predicting. I'm telling you what the charts are saying. I'm telling you what the technical aspect of the markets go. Fundamentals don't mean anything when you're trading. All right, fundamentals don't mean anything when you're trying to buy or sell a stock. You want to get in or out based on a technical reason that tells you that I should be getting in here or I should be getting out here. Fundamentals are only good to build a good list of things that you want to be involved with that you think that have a future. But why would you want to buy, for example, if you love Amazon, okay, and you think it's a great company, and maybe they are. I'm not saying they are or they aren't. I don't know yet. But if you believe that, then why buy them here when technically they're overbought? When technically they're going to see, I guarantee it, a 10 to 20 to 30 to 40% haircut at some point in the next year that you'll have a much better opportunity to buy into. So why chase it here when the technical levels don't give you the same action that you could get if you waited for a little bit longer? All right, and that goes with any stock. I mean, do you think you should be buying Apple at 180? I mean, again, you can, and I tell you that over time you will make money if you buy Apple at 180. But you want to buy it at 180 and take a 30% haircut and have to make a decision on whether or not you should get in or out later versus waiting for an opportunity when it gives you a good technical basis to get in. So again, you have to look at the fundamental versus the technical analysis to give you a better idea. And I'm just telling you that over time, using technicals into solid fundamental companies will give you a better opportunity. But to look at these consumer confidence numbers and get excited about it, that is already passed. Those numbers are old data. The market's pricing out 6 months forward. So don't think that it's going to change it. It does create a little bit of a spark immediately, but once again, we saw that, and we've seen this in history. Every single time we've had these major numbers, the markets typically go the opposite. Whether if confidence is way lower, the markets are getting ready to rally. Confidence is too high, complacency is too high, markets are getting ready to sell off. So I think that you have an issue here that we get mixed up with what's supposed to go on. Now, the big problem we've talked about a number of times is the debt problem. Right? There is a debt bomb coming out here. There is a reason to believe that there's many, many issues that are involved. Now, what is the debt bomb going to create? Well, the first thing is it's going to have to be paid back. Now, you have a Federal Reserve that doesn't have any idea about debt. In fact, last week, I think Powell kind of wondered why that the students, that the college debt or the student debt can't be dismissed or discharged in bankruptcy. Well, why should anything be able to be discharged in bankruptcy? If you're going to go through and put yourself in that position, then you should have to be good for the money. I mean, you know, I could go to school, build up a big debt, get through with school, file bankruptcy, discharge all the debt, and then go get my big $100,000, $200,000, $300,000, $400,000 a year job. This is the cockeyed system in which we operate on, where nobody's really responsible for the debt that they put together. I mean, this goes back to the housing crisis, when banks built these massive amounts of debts, which caused the overall meltdown, and yet they're all discharged and they're back up and making more money than ever. That's an issue that again, this is the cockeyed way we look at everything, and I think that becomes the bigger problem. When you refuse to recognize the debt issue, when you refuse to recognize true responsibility, where did it become that we are no longer responsible for our own actions? I don't understand. You know, when you live in your own household, you're responsible. You've got to pay your bills. There's nobody out there going to bail you out if you make bad decisions. So why do we reward bad decision making with forgiveness and moving on? Now, again, I understand that if something goes wrong, and we have certain bankruptcy laws and things like that, but student debt should not be discharged because you're making the decision to go to school to borrow that money. So why should that be a dischargeable debt? I agree that credit card debt should not be dischargeable. Again, we've made it far too easy for people to build up too much debt and then just go out of business. Well, what happens to the poor vendors that don't get paid their money from bankruptcies? You know, if you've ever been in business, you've had people go bankrupt on you and end up leaving you with nothing. So that becomes a much bigger problem. Again, you've got so many issues here that don't make sense that we continue to move away from, that I think that at the end of the day, it becomes a much bigger problem. And that's where we need to start to hone in and take care of our business to make sure that we're making business better for the country, for everybody, for individuals, and giving everybody a better chance to participate in what should be a free market, not a fixed market that is run basically by the Federal Reserve. In the meantime, this is Bubba's Bottom Line. Todd Bubba Horwitz. We're going to step out here for a break, and we will be right back with more of Bubba's Bottom Line after the break. What's up, everybody? Listen, you know, of course, you know, I talk about high school investing each and every week here. And of course, we are running a program for high school investing to our high school kids. We're in about 300 and some high schools throughout the country, and we'd like to get into 30,000. But of course, it takes capital. And of course, I have supported this program for 7 years. I'm looking for help if anybody wants to go ahead and chip in because of the content that I provide. And of course, you can go to Patreon, patreon.com/Bubba Trading. And of course, you can make a donation there. And for those of you who do, we'll get 1 free week of my futures advisory. You can check it out and see what you think of what we're doing, but you can also do a good deed for the youth of America. Hopefully we can get through some of these problems we discuss each and every week by educating our youth into understanding the financial system better than it is right now. Also, just for those who may be interested, we've got our new hedging classes starting on Tuesday, March the 6th. There's a link for sign up at BubbaTrading.com if you'd like to participate. Obviously, there's a cost. You can check it out. In the meantime, go to BubbaTrading.com if you want to learn how to hedge your portfolio and not have to sell out when the markets melt down again, and actually benefit from those positions and actually compound your portfolio. And of course, don't forget to get to Bubba Show every day at 4 to 5 Eastern at LibertyTalk.fm. And now let's get back to the show. And of course, welcome back to Bubba's Bottom Line. This is Todd Bubba Horwitz, and you know, we've got a great week last week for the farm products. You know, we've been on top of this here for months, saying that they basically could not get them lower. They kept trying to sell them. They kept trying to melt them down, but yet we kept saying, hey, they're a much better buy here than a sale. And because they can't melt them down, they're probably going to rally. And of course, what happened? Boom. We've had huge, I mean, the rally started a while ago, but we really had a big expansion last week with wheat getting over $5, soybeans getting into the 1070 level, and corn getting over 380. And of course, what does that mean? It just means that I believe that these are great products to own. I think they're going higher. Again, I know some of the reasons what they went higher last week was more of the rumor mill, the weather. You know, again, for some reason, everybody believes they can become a weatherman. and they can outsmart the markets, which they can't. But of course, you did have some of that built in, but you had great moves in markets, and they actually were able to maintain and sustain those moves. So I think that's something that we look forward to. And of course, I think right now you look in the grain space, every dip down, you should want to be a buyer. That's really what we're focusing on, is looking for dips to buy. I think we go, again, much higher. I think that this is the carpenter's song. We have only just begun. I think there's a lot more room to the upside. And finally, in the cattle markets, the fats and feeders finally reached our support targets where we want to get in. And now we're looking to get long that. So basically, the entire agricultural complex, grains and livestock, we're looking to be buyers. I think that you're going to see much higher prices going forward. And I think that is something now. So we've gone into a buy the dip mentality in here. And I'm wondering, is the buy the dip in the equity market still the play? Now, of course, this will be where the equity markets will end, is when we saw the big high and we just saw a lower high. And this is kind of how that big chart works out. And you're going to see that there'll be still some dip buyers trying to come in here, but I believe they're going to be wrong. I believe you're going to start to see that the overall picture is the correction is on its way. We're going lower. But now remember, as we go lower, you don't want to chase the markets down. You want to wait for the rally to a certain level before you want to get back in. Of course, we give those levels during the week at Bubba's Daily Update. But in the meantime, we want to wait. We don't want to really buy with fresh new money here. I don't think you're going to find yourself to be in great stead with the market. I think they look to be that they're going lower. And I think that there's a lot of issues out there. And, you know, you look at some of the things that are going on, and of course, right now we're looking like we're going to possibly get into a trade war. Now, I'm in favor of the potential trade war. I'm in favor of the tariffs. I'm in favor of changing a lot of things. I don't like the way that things are done right now. I'd like to see some of these things happen. I think that it's actually better because of what goes on and because of what we need to get done here. But, you know, we've talked about this many, many times on air, and that's the revolution. So we had the Bitcoin or the cryptocurrency revolution, which I believe is part of a financial revolution. You're now getting some possible trade problems. Okay, now is a shooting war far behind? And again, you've got Putin talking about nukes. You've got North Korea. So there's certainly some tensions throughout the globe. And again, I don't know that there's going to be any shooting wars going on here anytime soon, because again, obviously the problem here is a war could be the end of civilization. So I don't know anybody that's in too much of a hurry to start jumping into doing that. But it certainly has to be a concern, because when you come back down to it, it's about the money. Okay, and when we start to run out of money, when you're creating too many poor people, which you can tell me all the good stuff about the economy, but I'm reading about Disney employees that don't make money, that live like they're almost homeless, that are working. You see the jobs, the request for jobless claims is at, I think, record lows, but yet we don't have the big benefits here, and we're not seeing the big boom. You know, we're seeing a big boom where? Okay, you're seeing a big boom in the stock market. That is the only big boom, and that is the big money. When you look at what's going on, I think there's a lot of other problems that we continue to hide from, and I think that's another issue, that, you know, the economy and Wall Street, again, are not related. They are not from the same neighborhood. Okay, and as you look at the central bank and Federal Reserve interventions in all of these different areas, you know, if we look at the dollar, again, we talked about this on the top of the show, but the dollar being manipulated or being artificially suppressed because they want to keep interest rates low. Just so you understand the dynamics of how that works, is if you're borrowing, because lending is global, then the markets themselves, if I'm borrowing from the Eurozone, I'm getting about a 25% discount, so the rates can rise a little bit. But if the dollar rises, then all of a sudden that rate really multiplies out. And of course, we have seen from history that the Fed will make the wrong decision. You know, if they had done their job correctly all the way through, we would have already 4 or 5% interest rates, and it wouldn't be such a shock to the system. Yeah, maybe the equities wouldn't have gone up 200% or 300%, but what's the big deal? the equities are supposed to be for long term anyways. And again, it does not change one of the things going on. But what we are seeing now is a lot of asset accumulation by fewer companies. Okay, you know, we talk about earnings. Now everybody's bragging about what a great earnings quarter we just came out of. Now again, I'm not saying it wasn't good. The numbers were fine. But you're basing those numbers on artificial numbers. You're basing it on interest rates that are basically at zero. Well, interest rates are already going up. So what do you think that's going to do to the next quarter's earnings? Okay, they're not going to be good because the numbers don't lie. And if I'm borrowing money to show great numbers, and the interest, my cost of borrowing has gone up, which that's what's happening, it's going to change the dynamics of what my earnings streams look like. So you take the combination of the manipulation or suppression of the dollar, you take higher interest rates, and the dollar are going to start to rise, and interest rates are going to start to rise, even if they don't move the number, because of the dollar, they're going to rise, and that's going to create some havoc in some of these companies. Let's not forget that a couple of years ago, some of these companies like Caterpillar, they were whining because the dollar was too high, and of course it was bad for exports. Now, I don't believe that's as much the case anymore. I don't know that the relationship between the dollar and everything else is as solid as it once was, because everybody knows that it's just a manipulated product. It's not like it really means anything. And this is when you give governments, or in this case the Fed, too much control to play with these dollars and manipulate them. I think that it's a big thing. And I think one of the things that we look at as well here is, we'll call it an ominous sign that the U.S. economy, that there's a lot less spending on drugs, booze, and hookers. Okay, now again, what you're saying is those outside entertainment things are bringing down. They're telling you that the money is not as free flowing as you would think it would be. Okay, the overall intake of capital, of cash into people's pockets, and the outlay, they're either saying, hey, I'm not taking the chance anymore, or I don't have it. Right? But when you start to lose those entertainment values, all right, of you know, things that we spend money on, those outside items that aren't, you know, food and rent, all of a sudden you're saying, hey, there's some issues here that don't make sense. So we're seeing a lot of things out there that don't make sense throughout the overall economy, but yet the pundits and the brokers and the advisors, let's buy them, they're going to the moon, never again going down, okay? But all these little warning signs that continue to tick, but we choose to ignore them, all right? I can't tell you how important it is that you actually focus in on what's going on, because what you see here is a problem mounting. When you continue to ignore the debt bomb, when you continue to ignore the ridiculous rise in consumer confidence, the lack of housing sales, okay, you know, new home sales, down, excuse me, existing home sales way down. Okay, so when you start to ignore every one of these warning signs, that is when you set yourself up for the big meltdown. Now again, I firmly believe that the markets will have a 30 to 40% meltdown. Again, I firmly believe that they will make new highs at some point, but I do believe coming into now that we have ignored and forgot about every possible thing. You've seen crude oil in the sky for absolutely no reason. You've seen gold getting hammered for absolutely no reason. All right. So there's a lot of things that just don't make logical sense. And I think one of the things we always want to go back to is where the logic of the markets come in. And this is where I think we're missing out. And I think this is why I can say confidently that the markets the correction has started, and they're in for a very deep correction. Now remember, within that correction, there will be vicious rallies. We're not going straight down. You got to watch where you try to get in. You got to make sure you're hedged, and you got to make sure that you put yourself in the best position to be successful. We're going to step out for a final break and come back with my opinion, which basically the whole show is my opinion, but we're going to come in with an actual opinion on something. When we come back from the break, this is Bubba's Bottom Line. Todd, Bubba Horwitz. We'll be right back with more. Remember, everybody, highschoolinvesting.com. If you want to help a brother out, if you want to help out the youth of America, you can make a contribution there, and that's at patreon.com/Bubba Trading. If you do so, you do get a free week of my futures advisory service. get to check it out, see what we're looking at, seeing how we do it. And also don't forget to get the Bubba Show every day at 4 to 5 Eastern Time at libertytalk.fm. And our new hedging class starts on Tuesday, 6 Eastern Time. That's Tuesday, March 6th. You want to learn how to hedge your portfolio, never sell a stock again? I'm your guy. Come and see us on Tuesday. In the meantime, let's get back to the show. Welcome back to Bubba's Bottom Line. Todd, Bubba Horwitz with you. And, you know, I tell you, fortunately, you know, I get to use my bitching powers at certain times. And, you know, you may or may not know I was on a cruise last week, and I wanted to change my airline fee, and I had first class tickets to come back from Fort Lauderdale, and because of the way that American Airlines changed our flight a couple of months ago, we lost our early return, and the flight was going to be much later, which we didn't want to do. We wanted to come back earlier, so I called up. I said, okay, I want to switch to Miami, and I want to come back on the 9 o'clock flight in the morning or whatever it was. And I did, and I'll give up my first class tickets for coach tickets because they're going to whack me. Now, mind you, I could have bought the ticket right on the computer without talking to anybody for $145 and let my first class ticket expire and then get some credit back. But I figured I'd try to get it done, make sure I can confirm everything. So I call up and I go through this whole rigmarole. There's 4 of us. I make the change. I get it done. And they're going to email me the confirmation. Everything's great, no problem, no cost. In fact, I got back a voucher for a little bit extra back. So in the meantime, we get the email confirmation and they put the wrong date down. Now, I had 4 people witness that I said the right date and I did everything correctly, and yet they send the email with the wrong date. All right, it's the day before. Well, I'm still at sea, so I couldn't use the flight anyways. So I immediately catch it and I call back up and I say the whole story, what happened, where it is, and they go, well, too bad. And I go, wait a second, it was your fault. So my question here is, where has the true customer service gone? And when are we getting away from all this automation and all this BS where somebody can actually make a decision? So here they are, they made the mistake, they're blaming it on me. So I said, okay, I'll tell you what, give me back my first class tickets from before I changed, it was 10 minutes ago, all right, and I'll go back on the flight that I was on. All right. No, you can't do that, you already made the change. I said, I didn't make the change. You made the change, you made the mistake on the change, and now you want to penalize me. Well, if you want to go to those flights on the right day, it's going to cost you $200 more a ticket. I said, but I can buy the ticket for $145 online right now. And they go, well, that's basically too bad. And of course, it escalated, and if you've ever seen me in real action, I can be rather aggressive. And of course, I had to escalate up to, I don't know, maybe I got to the chairman of the board. I don't know who I got to, but finally, somebody said, okay, they worked it out for me. But it wasn't without an hour of arguing. Okay, well, I'm on my vacation through all these different people that nobody could make a decision on a mistake that they made. So we wonder, why are we having some troubles in this country? Because of all of this automation, we have no more personal touch to anything. And I think, to me, that's the crime of the world, is that we've lost the personal touch of business. And again, does it matter today? No, it doesn't matter. My one little airline ticket, does it matter? No. But I think this is the problem that we've now come into. We've lost the ability to serve people. We've lost how to service people. We're more interested in automation and not getting things done right. And of course, it's like insurance companies. They continue to say, you know the old story, deny, 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 until you get far enough, because most people just give up. Well, I wasn't going to give up because I had to get home. But it's extremely frustrating when somebody else makes a mistake, they blame it on you, and they want to charge you for your mistake, for their mistake. And I just don't understand how we can continue to be in business under these situations. To me, it makes absolutely no sense that we can continue to have this when really they're making so much money. Can't we get a little bit more customer service? Can't we get a little bit better of an understanding? Do they have to be such pains and really stick it to you on every possible turn? To me, that makes no sense to how they run their business. Now, again, they're successful. I can't take that away from them, although they have gone bankrupt a number of times over the years. But I just don't understand where we're headed with all of this technology. I don't understand where we're headed with all this lack of customer service. And when people want to actually talk to a real human being to get a real decision without having to go through a major hassle with everybody makes no sense. In the meantime, this is not just American, this is all of them, which is really a bigger pain in the butt than you can imagine. But hopefully, someday we can rectify that, because it really is a major problem. And for many, they wouldn't know how to fight through all of this, so they'd get screwed paying the extra money. And again, I'm a big advocate for the underdog, and it pisses me off. But what doesn't piss me off is I get a chance to share with you Bubba's Bottom Line each and every week. And certainly I appreciate you being here. And that will do it for today's Bubba's Bottom Line. Everybody have a great week. We'll see you on Bubba's Daily Update every day. And in the meantime, look for the markets to sell the rallies. We'll see you next week right here on Bubba's Bottom Line. Have a great week, everybody. Thank you so much. We'll see you later.